If this situation right here with Silicon Valley Bank doesn't have you questioning leaving your assets at the bank, letting them have control of your money, I don't know what will. We've been talking about this for quite a while, and here we see a huge bank collapsing. But I want to go over some information in this video that you might not have heard already, because if odds are, unless you've been living under a rock, you know about Silicon Valley Bank collapsing. But I want to go over some of the real numbers in regards to how this money could be insured, how much is even there to insure our money in the banks, and things along that nature. So, without further ado, let's get into it. The first thing I want to talk about is the size of Silicon Valley Bank was a little bit under 200 billion, I believe, somewhere in that range of 200 billion. Now, just to put it into perspective here, let's go to the FDIC. Here's the FDIC. Basically, the FDIC is the Federal Deposit Insurance Corporation, is an independent agency created by Congress to maintain stability and public confidence in the nation's financial system. How much money does the FDIC actually have? Let's find out. Let's find out. This is stuff they don't want us to know, right? They probably don't want some YouTuber digging into this kind of information, but let's go into it. The FDIC reports here. Let's see exactly their balance sheet. They want to know everything about our balance sheet, so let's look into their balance sheets a little bit. The Federal Deposit Insurance Corporation has $123 billion as of 2021 in assets. Liabilities minus that, and then this is for 2021. I believe in 2022, it's around $125 billion that they have to protect us. But wait, let's look at the bigger picture here. How much money is actually in the U.S. banking system? Oh, that's right. Over $22 trillion is in the U.S. banking system. That's with a T. They have with a B. 125 billion with a B they have to protect 22 trillion plus that is in the US banking system. What could go wrong? What could go wrong? Oh, I could tell you what could go wrong. Let's go into the next slide here. Again, this is information. If you could share these videos, would really appreciate it because I don't think the algorithm was going to like me very much for sharing this stuff. But let's go into some details about Silicon Valley Bank. Now, why did Silicon Valley Bank collapse? What is one of the biggest reasons? Well, interestingly enough, they actually went over this in the New York Times. So let's go into this part right here. Flush with cash from high-flying startups that had raised a lot of money from venture capitalists, Silicon Valley Bank did what all banks do. It kept a fraction of the deposits on hand and invested the rest with the hope of earning a return. They took the money in, kept a fraction of it, and invested it poorly, obviously. But here's what they did. In particular, the bank put a large share of the customer deposits in long-dated treasury bonds and mortgage bonds with a promised modest, steady return when interest rates were low. Interesting. So what they didn't take into account that the Fed was going to raise rates and continue to raise rates, which would then make the bonds that they got locked into not worth as much as what they locked them in too low. Now they could get way more money for those bonds, and people want to withdraw their funds and take advantage of that situation, but they locked in the money too soon. They held too little of the deposits on hand, and then they invested it poorly in bonds when they didn't recognize that the Fed was going to continue to raise rates. This is what all banks do? Interesting. This is what all banks do. Because last time I checked, the federal funds rate continues to be getting hiked up higher and higher and higher. And they just had Jerome Powell on the stand again, and he's talking about continuing to raise rates. So how many banks have locked in when the bonds were too low like that? I don't know. I wonder if Silicon Valley Bank is the only one. But here's the interesting aspect of it that not enough people talk about. Let's go back to this because I wanted to finish this. That had worked well for years. The bank's deposits doubled to $102 billion at the end of 2020 from $49 billion in 2018. 1 year later, in 2021, it had $189.2 billion in its coffers as startups and technology companies enjoyed heady profits during the pandemic. But it bought huge amounts of bonds just before the Federal Reserve began to raise interest rates a little more than a year ago, then failed to make provisions and for the possibility that the interest rates would rise very quickly. So they didn't take into account that the Fed was going to do what they did, and that is what caused catastrophe for them because they just invested wrong and they didn't keep enough of the people's money on the balance sheet. But here's the interesting aspect that not enough people are talking about, and I wanted to bring it up in this video. Please write a comment down below, share this video, and get it out there to some more people, because the crazy part is this is the size of the Silicon Valley Bank is about the same size as the amount that can protect it. Or worse, it's actually in 2021, they had more billions in their bank that is gone now, that went kaput, than the FDIC had to insure them. Isn't that something? The 16th largest bank, not the first, not the second, not the third, 22 trillion plus in the banking system. The 16th largest bank had more billions in it than the FDIC has in assets to insure the banks. Is nobody going to talk about this? This is insanity. This is insanity squared. And this is what our national debt looks like? Looks like that? If this video isn't a sign for you to go, wow, I need to reconsider where my money is located, especially if it's over 250,000. And even if it is 250,000 or less, know that the people that are FDIC insuring you, why don't we look into their annual report? Again, they have roughly 125 billion at their disposal to cover 22 plus trillion. This would be bad if it was only 1 trillion. 22 plus trillion? You think they're going to look after you and I? No. The people that are supposed to be insuring these banks are smaller than the bank that already went bankrupt. That's insane. Just wanted to put that out there and make a quick video. If you didn't think of that already, just wanted to let you know. Interesting aspect of something that did happen with this report. Well, let's go to the stock market here. Let's check out gold's price. So actually, on that news, which was interesting, this is something very interesting for the precious metals market. When the market was down, the S&P was down a bit, the Dow Jones was down a bit, NASDAQ down a bit, and then we saw metals jumping a decent amount off of this news that the bank collapsed. That's interesting to me. I wonder if that's how that's going to play out. Put a comment down below on what you think. If more people are going to be taking their money out of their bank and putting it into safe assets, hard assets that they have control over. That's the video. If you liked it, please hit the like button. Please do click the subscribe, and I will see you at the next video. Signing out.